Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas, market analyst at FXPesa. So today we are looking at yet another interesting day where yesterday we had a lot of volatility in the markets, especially coming in from the job openings data. We also saw a lot of volatility coming in from Jerome Powell's speech to the House of Representatives. And today he will be making yet another speech. So the first one, the testimony was to the House of Representatives. Second one will be of the Senate. It's a semi-annual meeting that he normally does, basically to update the US legislature on the current monetary policy and where that might be headed. So we will be expecting to see a very strong momentum coming in for this one. So I would like to begin by going through a couple of charts to understand what exactly happened yesterday. So the most volatile asset in the market yesterday was the dollar, which managed to make a big drop. You can see the way the dollar index performed. Having opened at around 103.7, we managed to cross somewhere around 103.232. So there's still more room for downside, especially considering if the market is pricing in early rate cuts. But then there's a conflict in what Jerome Powell was saying and what the market was responding to. So let's look at gold, which also had a very strong momentum upwards. So you can see that on Tuesday, there was an all-time high for gold. Then on Wednesday, the market kept going up, and today being last day, we have seen some further momentum upwards, basically implying that gold is on a very strong bullish momentum. So as we speak right now, we are looking at potentially the 7th day where gold has been just moving upwards, having gained on an estimate from this area here. This is about 6.39%. And it doesn't seem like anything is about to stop this bullish momentum. So we will be observing the market to try and understand if there is any form of weakness in this trend. So if we see weakness, then we apply caution. But as per now, it seems like gold is currently very strong in terms of bullish momentum. And there's a strong likelihood that this momentum continues for the rest of the day or maybe reverses, especially after Jerome Powell's speech. So with that being said, there's other assets that were currently very volatile yesterday, including the Nasdaq 100 index, which managed to make a very strong rally to around 18,100. So the highest price we got was 18,146 before it started erasing gains, and this morning has continued erasing the gains we had seen yesterday, and we have already tested yesterday's low. So if you look at the lowest price yesterday, it was right here. And this morning we managed to touch that, and it seems to be acting as some form of support. So we'll be talking about that later. Looking at the Dow Jones, also there was a very strong momentum before later on erasing the gains. And for the S&P 500, same case, very strong bullish momentum, then erasing the gains later on in the day. So as for the major currencies, we saw the Japanese yen really strengthened against the US dollar. So from the 4-hour chart, this is how it looks like. So we were literally monitoring this triangle here. There was a break last week and then a retest. Then this week, we saw some bullish momentum on Monday, retesting this area before we had this massive drop. So from the 1-hour chart, this is how it looks like. So we are looking at basically consecutively 3 consecutive days of the yen gaining against the US dollar. And from the daily chart, it seems to be a very strong momentum. So for Euro USD, very strong gain against the dollar, erasing some gains towards the end of the session yesterday. And today seems to be erasing even more. So if you look at Pound USD, it's the same thing, very strong momentum against the dollar, losing a little bit towards the end of the session yesterday. So on the 4-hour chart, this is how it looks like. So you can see that we literally tested a major resistance level around this area here, an area that was previously being used as resistance. And now after the pound hit that area, we can see the reversal beginning to happen. So USD CAD, very strong and straight up drop. Now it seems to be continuing. So we'll be looking at potential targets along this lower trend line here. So there is a good chance that we will be seeing some further momentum downwards. So Brent oil was pretty strong for the better part of the day before erasing some gains, especially after Jerome Powell's speech. And since then, it has been moving sideways. Euro 50 cash index remained within pattern. I wouldn't say that this was a major shift in the momentum, so it has remained within this pattern here. And if you look at Bitcoin, it had a big drop on Tuesday, all the way down to $59,000 per Bitcoin. Made a very impressive recovery yesterday, and today it seems like the recovery is continuing. The French 40 index has maintained in this range, so nothing much has changed for this one. Of course, for New Zealand USD, very strong rally towards the upper trend line, and USD trading against the Swiss franc. All we are seeing here is a mix of trading ideas, where we are seeing the market extending the range. So since we got to this high, we haven't had much of a movement. So it's more likely that the market has just been moving sideways. And from the 1 hour chart, it seems like yesterday the dollar was losing against the Swiss franc, and we are yet in an area where the market is now retesting yet another support. So that being the summary of the movement yesterday, let's look at the key events that we are expecting in the markets today. So hello Manabasto, hello Jason, hello Michael. So let's get things going. So on the next part, we'll look at the economic calendar. Hello, Francis. So from the economic calendar point of view, yesterday main events were one, the Bank of Canada maintaining interest rates at 5% as expected. We had the IVA PMI, which came in at 53.9, slightly below the previous reading of 56.5. We have the speech by Fed Chair Jerome Powell, and of course, job openings came in at 8.86, slightly higher than expected and lower than the previous number, but still indicating a very tight job market. So with a tight job market, it basically means that there is a possibility that the Fed continues holding interest rates higher for longer. So the focus of the markets today will be on one, at 4:15 p.m., the ECB, or the European Central Bank, will be meeting and making a decision on interest rates. And the market has an overall consensus that the ECB will not hike interest rates, but rather they will hold them at the current level of 4.50%. So there will be a monetary policy statement released at the same time, and then 30 minutes later, and that is 4:45 p.m., you will get the ECB press conference. So the ECB press conference is expected to be the one data that brings in more volatility for the euro. So that's when we'll see a majority of the price action happening. So later on, we will see the unemployment claims at 4:30 p.m. So this is the number of people who filed for unemployment insurance for the first time in the last month. In the last week. These are weekly data point. So in the previous reading, it was 215K. We expect a slight increase to 217K. So when unemployment claims are increasing, it means that the job market is softening, and that is consistent with the Fed's expectations. But then if we see the opposite, let's say the number reduces from 215K to a much lower number, then in that case, we will be considering some higher for longer kind of a scenario. However, judging from the previous number or data points, we can see that generally the unemployment claims have been on a downwards path. They've been moving downwards. So with this downwards momentum, then we can assume that they will likely continue dropping, and with unemployment claims dropping, then it means that the labor market is tight and the Fed may have to hold interest rates higher for a longer duration of time. So that will be a key focus for the day, but the most important focus will be the two speeches. So the first one, ECB press conference. This is where the ECB President Christine Lagarde will be sitting down, and this is after the interest rate decision, trying to explain why they made their decision, what is the outlook for the ECB monetary policy, and that is expected to shed some light on where interest rates might be headed in the Eurozone. So the next one, which is the Federal Reserve Chair Jerome Powell, he's due to testify about the semi-annual monetary policy report before the Senate Banking Committee in Washington, D.C. So notice that yesterday's was a similar speech, but in this case, it was presented to the House Financial Services Committee, still in Washington. So the key difference here is that the Senate tends to be tougher because they are insiders, they know more about the government policies in the US, so they have much stronger questions, and the responses to these questions by Jerome Powell may have material impact on the direction that the markets take. So remember, at the beginning of the year, the markets were pricing in potential that the Fed will consider at least 5 rate cuts for the better part of the year. This number has reduced to 4, and then 3, and then from Fed member Kashkari yesterday, he basically said that these could be dropped to 2 or even 1, depending on how the US economy responds. So, as per the Fed rate or the FedWatch tool, we know that there is a 95% possibility that the Fed basically holds interest rates steady on its next meeting. The next meeting will be on the 20th of this March. 20th of this month, which is the month of March. So on the next meeting, which will be on May, this is where we start seeing potential increase. Remember when we covered this again last week, the potential for a rate cut in the May meeting was way below 50%, and for a rate cut was above 50%. So what we are seeing here is probability increasing to 83.1%, whereas the probability for a rate cut reducing to 16.3%. So this means that there is a strong likelihood that the rates will stay higher on the March meeting as well as on the May meeting. And now if we shift now to the mid of the year, which is the June meeting, this is when we have a high probability of 60% that the Fed will eventually cut interest rates. So the real question is for the better part of March, April, May, those are 3 months through to June, the market is anticipating that interest rates will stay higher for longer. Then why is the dollar index selling? Why has the investors been selling the dollar in the last 2 days? So that's the big question to be asking today. Because from the Fed funds futures, it seems like the market is really pricing in a probability that the rates will stay higher for longer, with the first rate hike potentially coming in June. So if you move to the July meeting, that is 1 month past the first half of the year, there's a 40-40 probability that the rates now move further downwards to 4.75 and 5%, and a 40.9 probability that the Fed holds even higher, between 5% and 5.25%. So that's the key valuation in the markets today, and investors will be trying to digest the information from the speech today in trying to understand whether the Fed will be going for a rate cut in June or whether that decision will be pushed forward to July. And that really depends on the data coming from the US economy. So that being said, I don't think we have any other major news to be focused on today. And of course, as we head into Friday, you remember that there will be non-farm payrolls going on. All right. So on the next part, we try and cover some technical analysis, understand where the markets might be headed. And once we cover that, hopefully everyone will understand where to identify positions in the market. So knowing what we know and looking at quite a number of assets in the markets today, the first thing that comes to mind is that over the last 3 weeks, this is the lowest we have seen the dollar index trading. So after the big sell-off yesterday, we have seen the market retest this support, and it seems likely that the dollar might find some support here and start regaining some of the momentum it had lost yesterday. So if this happens to be the case, and say for instance, we see the dollar index making a rally to this area here, then this would have some wide implications in the market, and these implications would mean the dollar making a recovery against other pairs. So, for instance, if you look at USD JPY, there's been a big sell-off for the last 2 days, today being the third day, and at some point we expect the market to experience some form of breather or some form of support, and that could be happening in any of the following areas. So this area acted as support for quite a number of times. You can see right here, this point and this point, and now the market could be gunning for that area. So the previous area, which was acting as a resistance, has already been surpassed. There seems to be some form of support here, though I don't think it's that major. Of course, some more support around this area here. So in this case, we don't know whether the market will be bouncing from this area here, or whether it should be bouncing from this area here. However, the prevailing trend is very strong, and I expect this momentum to continue for the better part of the the London session. So there is a good chance that this bearish momentum continues for a while, given the extreme price level of 150.866 and how long this area held as resistance. So we can all see that the market was consistently trying to break this area, failed to break, and now it's making a big sell-off. So in this case, there's still more room for downwards momentum. So USDN seems likely, but it may continue being weak, but at some point we should be expecting to see some form of breather. So as for Euro USD, this is the one currency pair. If you're a beginner and you don't know what you're doing, then this might not be the best day to trade it. So the main reason is because they have two key events happening at the same time. So the first key event being Jerome Powell's speech, and the second one, the ECB interest rate decision, and of course, the ECB press conference. So with this in mind, then this is what we are basically looking at. So we have this support area here. We have this resistance area here, which was acting as a high as far back as 2 weeks ago. So what we are seeing is a market that has broken this particular resistance here, rallied all the way to the resistance. You can see the previous time that the market found resistance here. So this was the prevailing resistance. Market pulls back for a while, then makes a rally to the same area. And now we are seeing the market retesting that same area. So after the clean break of this area, the market is retesting. And now our point of interest is what the market does around this area. So we'll be observing to see if there's a good bounce from this area. The market continues with the trend. So these are break, retest, continuation type of formation. But also there is that potential that the market could continue with the drop and perhaps go to retest yesterday's low. So that this is also within the limits of possibility here. So it's more about being patient and observing what happens in the market when prices are playing around this area to see if there will be a bounce and the market continues with the bullish momentum. So if the market was to continue the bullish momentum, we head on to the next level that was acting as a resistance. So potentially moving to 1.09280. So we don't know what will happen. So we just remain patient around this area. So as for Pound USD, we are seeing a sustained bullish momentum. So I'll try and remove my previous bias or previous analysis, and then bring in the current price action to try and understand where the markets might be headed. So first things first, this is a major resistance area turned into a support. And now you can see this was a breakout, a retest, and a continuation higher, meaning that there is a very strong bullish momentum. Then we observe that this area here seems to be a very strong resistance for this chart. And there's several times that the market has found resistance around this area and immediately changed direction. So after testing this area here, there's still sustained momentum upwards, and the market could be headed for this resistance here at around 1.27725. But then also a retest of this area could also be in the books. So it really depends on what happens within the next couple of minutes. And what we are seeing here is a market that hasn't been doing stuff since the opening of the markets today. So we'll be observing these to see the direction of the break. And if the break is towards the upper side, we go long and target the previous high. If it's towards the lower side, we go short and target this previous support. And as we all know, this area was pretty important. So if the market was headed down, then this would be a nice target. So USD card, big, strong bearish momentum happened yesterday. And if you compare this with the oil prices, they're still significantly high, considering that they're trading at $82.45 per barrel. So in this case, if you're trading USD card, then you want to make sure that you capitalize on the strong momentum. And there's this likelihood that after the Bank of Canada strengthened the Canadian dollar yesterday, then this could be extended. But if the dollar finds support, then the area to target would be 1.35348. So this is a nice pullback area. Remember, it was a major resistance, now turned into another resistance. But then if that doesn't happen, the idea here is to continue the strong bearish momentum towards 1.34766. So how do you know the direction to take? The way you do this is by observing what the price is giving you. And as per now, it doesn't seem that likely that we have any strong momentum. So at some point, we'll see the market comprehensively making a move towards the upper side or the lower side of the triangle. And that will show us the direction the market is taking, depending on the range of the candlestick. The range is the difference between the high and low of a candlestick, which is relative to other candlesticks. So in this case, a strong momentum downwards, we target this area. Strong momentum up, we target 1.35348. So as for gold, what we are seeing is a sustained momentum upwards. So in the last couple of minutes, it seems likely that the market is rejecting lower prices. You can see the long lower tails. So the highest price we saw this morning was 21.61, and now the market is gunning for that same level. So it seems likely that gold prices will be headed to the same level again. So with this acting as a support, and this is a very short time frame, a 5 minutes chart, and the main reason I'm doing this is because gold is currently very volatile. So a very strong candlestick from a 5 minutes candle this morning was 547 points. And if you combine a couple, this is 1500 points. So that's why I'm using a smaller time frame, because the momentum kind of handles a lot of pips if you use a higher time frame. So in order to be more accurate on this one, notice how we have this very bullish channel, and now the market seems to be gunning for the next resistance and perhaps even breaking and heading all the way up to around 21.65. So it seems highly likely that gold will be going for this bullish momentum. So we just remain patient and see what happens next. So as for now, this strong rejection of that area basically indicates there was a strong entry by buyers. And from here, it seems likely that the market will at least hit 21.61 before potentially extending to a higher level, in this case, 21.65 price level. So US equity indices are finding some necessary support. So if this candlestick was to close like this, then it would be a confirmation that buyers are coming in yet again. And remember, this was yesterday's low. So market went up, pulled back down, found support here, and now it's finding support along the same area here. So if that happens to be the close for the day, then the target now becomes yesterday's high. So we will be operating within our target of yesterday's high. So this can be a really nice position if the market was to close at this area or even higher than this. So US30 also doing the same thing, US 500 doing the same thing. So it's along the same kind of approach, whereas the Brent oil prices are basically erasing yesterday's gain and potentially heading to yesterday's low. So we are seeing the market headed to $81.59 per barrel. So after the big rally and erasing some of the gains, today it seems like the continuation back downwards, and that might imply that's where we're headed. So Euro 50 cash index bouncing from this support means that we might be headed higher. BTC USD making a very strong recovery after the big sell-off here, and now we might be headed for another yet all-time high. This could potentially break the 68,738 price level that we saw 2 days ago. So French 40 index bouncing from the lower side, still trading within the range. So now we are seeing a market that is now headed to the upper side of the range. So New Zealand USD continuously pushing. So I'll be observing 0.61584 as a nice target area to see whether the market breaks or bounces from this area here. So the indications of the market breaking implies long positions. If the market fails to break this area, then we go short. And USD CHF are basically retesting this area again as the dollar takes a step backwards, though it seems like one of those very noisy markets that you don't want to trade unless there is a break. So this movement down, up, down, up, down, up doesn't make a lot of sense to a trader. So you want a consistently trending market. So in such a case, I prefer staying out until there's a potential market opportunity. So that's it for the day. I'll be checking in on the questions you guys have raised and try to respond to them. Hey, Michael, Robert, Francis, Moses, and Charles. Hey, Manthi, Esther Nekesa. Hey, Rufas, please explain BTC stuff like halving and the approval of its ETF, what this means, and approvals of BlackRock ETC will affect this asset. Kindly not on this platform. I think I've already covered this on my Twitter. Kindly check my Twitter at RufasKE and you'll find that I literally covered this just yesterday. Hey, Maureen. Hi, Jay Squad. A good comment from Apollo. I followed the Powell interview, and what caught my ear is he said rate cuts doesn't necessarily wait for 2% inflation rate. However, there was concern on banks, especially New York community bank problems. Yes, the banking sector is really weak. We know this quite positively from the way the stocks in the regional banks are performing. So as a result, there's concerns that the banking sector could be fragile. So what Powell basically said is that they don't have to wait until inflation gets to 2% for them to begin cutting interest rates. However, they were pretty confident that the current interest rate level is sufficient to get inflation back to the 2% target. So the question of further rate hikes is out of the window. However, array rate cuts is still a problem. Nobody is projecting that there will be array rate cuts. So as a result, what we are seeing is the market pricing in these rate cuts even before they happen. So given that there is a 3-month window between now and June, it means that for anyone who is trading treasuries, they have that opportunity of going for that position and then benefiting from that position even before the Fed goes for the first rate cut. So there is still an opportunity that things could stay high. So we should be expecting these to continue for a while, but the dollar index may make an impressive recovery later today, knowing that the rate cuts are much further than earlier anticipated. So another good question, is ADP, jobs, and non-farm payrolls correlated data? They can be correlated sometimes they will not be correlated. So ADP is a measure of US non-farm payrolls that are focusing on the private sector. And these payrolls are done from a private company called Automatic Data Processing. So using this company, investors are able to gauge the jobs created in the private sector and then correlate that with the official non-farm payrolls. So sometimes they have a discrepancy, sometimes they are accurate. I have not seen a consistent relationship between the two. So job openings, on the other hand, are basically the number of job advertisements, which basically depend on how competitive or tight the labor market is. So this can be compared across different economies, looking at the number of newer advertisements, let's say between the US, UK, Eurozone, but you can't compare the jobs with the non-farm payrolls. So another comment here, Powell also mentioned something like expect changes in materials and capital. I can't recall the exact words. So remember listening to this, it was lengthy. So change in materials and capital, I think we are talking about capital allocation as a result of the high interest rate environment. So he's concerned that in terms of capital investments within the US, they might go a little bit slow as a result of the high interest rate environment. So he knows that this is deindustrializing the US. So at some point, he will consider the rate cuts. So that's quite a challenge, and it's something that he is probably considering going forward. So, hey, Anne, hey, Tony, just checking on the last questions. What can you say about crypto airdrops? I don't know. I don't have an opinion on that. Will the rise for cryptocurrency affect gold? This is something that every investor in Wall Street has been trying to rationalize. Gold had one of its best bullish momentum when its first ETF was launched. So now, the first Bitcoin ETF was launched in December last year, began trading this January. And what we are seeing is these ETFs accumulating a lot of record capital within a very short period of time. So as a result, we know that this money is not just coming from God knows where. We know that this money is coming from other assets. So if there's anyone who is going for a gold position, then you should know that there is a likelihood that some of the liquidity in gold is moving towards Bitcoin, being the hottest asset in the market right now. So what we are seeing is a lot of funding inflows, and this funding is coming from other sectors of the economy. And there's a good chance that some of the market cap that Bitcoin is taking is also sliding from gold. So I cannot say definitively that all this is coming from gold, but it's coming from different aspects of other asset classes. So that's my perspective on that. So last question here, what's your opinion on WorldCoin cryptocurrency? So I'm a Bitcoin maximalist. I put full focus on Bitcoin. So I might not know or be the best person to advise you on WorldCoin. So thank you very much, guys. And I hope to see you on the next session.